What a day. Today was a massive day for our AI-focused portfolio. We saw an absolutely red-hot rally in semiconductors and some of these key infrastructure stocks, and it pushed us past a major milestone. So let's get right into it and break down what happened.
And yeah, here's the big headline right up front. The portfolio is officially back in six-figure territory, pushing past $100,000. I mean, after some of the single-day moves we saw, this is a huge milestone, both psychologically and financially. And look, this is super important. This is not some meme stock rally. This isn't just speculative hype. The gains we're about to dive into, they are rooted in solid company performance, real demand, and some really powerful long-term trends. All right, so who were the big winners today? Which companies were really the engines behind this incredible growth? Let's take a look.
Okay, the absolute star of the show today, no question, was Navitas Semiconductor. I mean, just look at that number. It popped over 20% in a single day. A move that explosive was a massive driver for the portfolio's comeback. So what on earth caused it? Well, it really comes down to this. These things called power integrated circuits, or ICs, are finally getting their moment in the sun. Think about it. The nonstop demand for AI chips creates this massive need for smart, efficient power management. And with data centers being built at a record pace, companies like Navitas are just perfectly positioned to ride this huge infrastructure tailwind. All right, next up we've got SES AI Corp, another one of these critical infrastructure plays. And wow, another fantastic day here, jumping over 11.5%. You see, that's another double-digit gain, which just goes to show you that this momentum is spread across the whole AI supply chain, not just one company. The story here is a little different, but it's just as powerful. Battery technology is back in the headlines again, and it makes sense, right? These AI data centers are insanely power-hungry, so innovations in how we store that energy are becoming critical. Plus, it looks like the big money, the institutional investors, are really starting to pay attention.
And of course, you can't talk about AI chips without talking about a giant like AMD, which just kept on climbing today. And this chart really shows you the power of investing over time. Our earlier position was up over 9% today, while a more recent addition still gained nearly 2.5%. Both are contributing to the surge, which is exactly what you want to see. So what's the spark here? It's pretty clear. That recent news about them partnering with OpenAI has investors totally buzzing. It significantly beefs up their demand forecast and really positions AMD as a key competitor in that high-end AI chip space. Okay, so let's be real. Gains like these don't just happen by accident, right? They're the result of a very deliberate strategy, and it's all focused on the core foundation of this AI revolution, its infrastructure. And when we say AI infrastructure, what are we actually talking about? Well, we're not just looking at the flashy apps you see on your phone. We're going deeper. We're investing in the nuts and bolts, the essential hardware, the chips, the batteries, the automation systems that make all of it possible in the first place. And this right here, this is the heart of the entire philosophy. It's the difference between chasing hype and owning the enablers. You know that old saying about the gold rush. You could either try to find gold or you can sell the picks and shovels to all the miners. We're betting on the picks and shovels. It all really boils down to three simple ideas. First, we're riding long-term adoption curves, not chasing short-term headlines. Second, we focus on the entire process, all the way from chip fabrication to data center deployment. And finally, we target these up-and-coming companies where the potential for growth is just massively bigger than the potential risk. All right, we have to talk about the elephant in the room. Anytime you see gains like this, you're going to hear that one word, bubble. So let's just tackle that concern head on. And this isn't just some random chatter on the internet. We're talking about heavy hitters like the Bank of England and the IMF putting out official warnings, drawing these parallels to the dot-com bubble. And you know what? It's a valid concern. We can't just ignore it. But that leads to the real question, doesn't it? How do these big, high-level warnings actually stack up against what's happening on the ground, with the actual companies making the actual stuff? Here's your answer. 39%. That is how much TSMC, the biggest chip maker on the planet, just smashed its earnings expectations by. And guess what the driver was? You got it. Real, tangible demand for AI chips. And honestly, that is the whole ballgame right there. This is the crucial takeaway. Unlike the dot-com era, which was so often built on hopes and promises and not much else, this rally is being underpinned by staggering real-world revenue and profits. This isn't just smoke and mirrors. Okay, so with all that in mind, where do we go from here? Let's look at a few key things on the horizon that could tell us if this rally really has legs. So here's what's on my watch list. First up, Palantir's earnings. That'll give us a great read on the health of AI software demand. We're also keeping an eye on bellwethers like Tesla, just to see if that broad market optimism is still there. But the big one, the most important metric, is whether the wider tech sector can keep up this incredible 20+% earnings growth, because that's the fuel for this entire fire.
And that all leads us to the final multi-billion-dollar question. We know the fundamentals are solid, we know real revenue is pouring in, but in a market this uncertain, are strong earnings alone enough to keep this AI rally going? Well, that's the question on everyone's mind.